In today's Consumer Alert, another interest rate hike is expected tomorrow, and as a result, Wall Street opened the week with heavy losses. Michael George is in New York, where experts are now declaring it a bear market.
Stocks opened higher this morning following a big sell-off on Monday. The S&P 500 began the day in bear market territory, down more than 20% from its peak.
Consumers feel less confident today than they did amid the worst part of COVID.
CBS News business analyst Jill Schlesinger says soaring inflation and the likelihood of more interest rate hikes are pushing investors to sell their stocks.
The Federal Reserve has to thread this needle. They want to slow down the pace of inflation. But by raising interest rates, what's happening is they could actually tip us into a recession if they go too far, too fast.
If the Fed doesn't raise rates, inflation could keep rising. Right now, gas is at more than $5 a gallon. Food prices are up 10% in the last year, and the cost of travel up 38%. With the market tumble, millions of Americans who have their retirement savings tied to a stock-based 401k account are asking what to do about it. Some we spoke with say they've been through this before.
You know, it's the people who are younger who really start to worry. My only concern is how long this will last. Will it last until the time when we have to start taking money out?
Many financial advisors urge their clients not to sell when the markets are low, especially if the money inside the 401k won't be needed for years to come. Michael George, CBS News, Wall Street.
Analysts say a silver lining for falling stocks is that the investors who buy now are getting in at low levels. That could pay off when the markets rebound. But what is a bear market? Experts define a bear market as when an index like the S&P 500, the Dow Jones Industrial Average, or even an individual stock has fallen 20% or more for a sustained period of time. It indicates a market slump. Bears hibernate, so bears represent a market that's retreating, whereas in good times it may be a bull market because bulls charge. The S&P 500 is nearly 22% below its record set earlier this year. The Dow and Nasdaq also tumbled recently. A huge rate spike on mortgages means home buyers will pay quite a bit more for their monthly payment. The rate has nearly doubled since the beginning of the year, and today it tops 6%. The rate jumped 33 basis points just today, according to CNBC. That means a monthly mortgage payment on a $400,000 home loan went from $1,400 in January to more than $1,900 today. In fact, buying a home last week will have a lower mortgage payment than if you were to buy today. Coupled with inflated home prices and low supply, it's going to put prospective buyers in a pinch. And in your health news, Paxlovid is an antiviral pill prescribed to people at high risk for severe COVID. Studies show it can reduce the chances of needing to be hospitalized, but some patients are now reporting a rebound of COVID-19 symptoms after taking the drug. Mayo Clinic researchers looked at 483 high-risk patients treated for COVID-19 with a 5-day course of Paxlovid. Only a handful of patients developed rebound symptoms. Most were vaccinated. Researchers think the symptoms are because the drug may trigger an immune response, but doctors agree more research is needed. Right now, scientists are looking at whether longer treatment may help. Just like other antiviral medications, Paxlovid needs to be taken early in the illness, so within 5 days of developing symptoms. Hutch